I'll give you an example just so you guys kind of get a picture of some of the things that we do. We have two programs primarily that we use when we do investments. The first one is what we call the joint venture real estate investment platform. You guys heard of the joint venture? Some of you guys have been in presentations that we talked about. Primarily, that is a short-term relationship. It is what we call our dating service program, right? That's how we build a relationship with someone we've never met before. We get them to invest with us, we perform, and then we develop the relationship to go to the next level, which is the second product, which primarily is commercial, and that is through a private placement offering. A private placement offering has a lot more regulations and a lot more things, but it's a vehicle that you use to syndicate and finance bigger projects, like that big building over there, okay? So there are different aspects to what we offer. In our joint venture model, one of the things that we found was the most effective way is when we were dealing with our clients, one of the biggest things that we had found, because we've interviewed a lot of clients and talked to prospects and to kind of feel out what they were looking to achieve. And we found that a lot of them were kind of feeling like, you know, hey man, you're offering me 10% return on my money every year and you're making all kinds of money off of it. I would really like to participate in the percentage of the profits. So then we said, okay, well, what does that look like? What is fair for them, but also fair for us? And we're doing all the work and putting some things together. So in the joint venture program, which I'll talk about more later, we actually developed it where they get a percentage of the net profits. But one of the other pieces that we added to the equation, which should also be a part of what you're considering, is, are you putting some money up? Because a lot of investors are looking for that. So a lot of times we will finance all the way up to 65% of the after fair value, either with our money or some private placements that we put together or other funding sources. So we have more capital out than the investor. Do you think the investor feels more comfortable when we have more skin in the game than they do? Mm-hmm. Absolutely. There's a lot more credibility behind me saying, hey, we're going to buy $200,000 property. I'm putting $185,000. You guys with me? Mm-hmm. It's a big difference. So one of the things that you have to, again, condition yourself is that. On the private placement, however, on the private placement, the way that it's designed primarily is we offer a cumulative preferred return, which I'll talk more about that later. And then we offer a percentage of profits. So it's more of a combination of debt and equity.